Welcome to Trading Lounge and the European indices. We'll cover the DAX and the FTSE. So with the DAX here, we're looking at this as this move down here is wave A, and then an A and a B and a C wave moving back up to this 61.8% mark here roughly, can move higher into this little consolidation area here, which will also be a trigger as resistance here. But we're looking at the S&P 500 moving higher, so it's quite possible that this can also move higher here as well here. So it would certainly need to gain some support around this particular area here. But we'll just climb up through the levels. So we've got group 1 here, group 1, which is 100, 200 and 300. If we get support on 300, well then obviously we'll be going higher at that point, but even support on 200 here would be a bit of a catalyst for further upside here, and further upside here. This wave 5 of 1 here is part of the weekly count that I've had as as a bullish count. So having wave 3 here, an A and a B and a C for wave 4, up for 1, back for 2, up for 1 and back for 2 here, and then continuing to move higher, expecting a strong move higher here. It's just that the move down through here hasn't counted very well as a corrective wave. I mean, it certainly moved down sharply as a wave 2 would do, but just doesn't count as a corrective structure. So a little bit of a problem within that, but that was the sort of big account that we've had there for a while. So that could certainly come into play here. And let's just look at this here. We've been looking at having a long trade within this space here, and we can move it, well, just put a stop in under this particular space here, just keep it under the 100 here for the time being. And let's just see how it pans out and get support here. Obviously we can see that it took a while to get support on top of 1 here, 1 being the strongest number in the market, but it certainly has made that support there. So we need to see if it gets support here, and the normal pattern here is the arrival, the reaction, the first high above the level for that. So the pattern that we're looking for in a bit of a nutshell is this one here. So we have the arrival, the reaction across the level, the first high above the level, then a corrective move here. And this also fits into Elliott as the 3rd, 4th and 5th and ABC and so on. But just to draw the line across here as and see this and see it as support and resistance just makes it a little bit easier. So we've got this particular pattern, and the variation on that is where it doesn't move back down below here. It just finds support here, like walking up some steps, and this one here would suffice for that. So if we consider this the 200 area through here, there's not much that can really happen at a level. The only other pattern that can really occur at a level is this one here, which I call the overshoot pattern, where it doesn't stop here and just moves straight up, just goes straight through there. Normally the distance that moves above will be the distance that drops down, and then it pretty much vibrates into the closest largest number here and finds support, and then moves up from that point. So there's not really a lot that can happen at a level, you know. So once you understand these sort of 3 pictures here, this one being the most common, it's helpful. So here we have the arrival, the reaction, the first high above the level, and then we should see, once that finishes here, we'll have a look at the tick chart in a moment. Yeah, somewhere in there, then there'll be a little ABC pattern in here, and then back up. So it's sort of over here that you want to catch it. Over here, you don't want to be going long on the first high above the level. That's when you get trapped. You have to wait for the accumulation process, well, which is the corrective process, really, or sideways corrective pattern. So on the tick chart here, we can look at this. It's a little bit tricky on some of it's easy, some of it's not. Let's just get a week in here. So from this low here, we can look at this as wave 1 and 2 here and 3 here. I'm a bit skeptical about wave 4 because obviously it's overlapped wave 1 here. So what we could actually have here is up for 1, back for 2, up for one, and then back for two again. So we could actually have this as 1 and 2 here as well in this case. We've also got the same problem within this little spike here as well. I'll need to check the cash market for that, but just for the time being, I'll leave that as 1 and 2 here. But we could have an extra wave structure in all of this here, but it doesn't really. This is like a little overshoot pattern here, so it doesn't really stop here, just goes straight up, and then it has its correction, and then you look for support back over here as soon as you get it, you know, or breach higher. But this is just a bigger picture one here with the arrival, the reaction, the first high above the level. This is not finished yet. You can see that this is wave 1 and 2 in here. This is all part of the third wave here. So we'll see that push up a little bit higher through here. There's also the next levels within here as well. So the the 100 is part of group 1, so is the 200, then the 300 up here. That's all part of group 1, and support on top of group 1 up here, the 300, sets the target for 5, the next number in this Fibonacci sequence. But also too, we can move in closer here as well. So we've got 10, 20, 30, midpoint being the 50 in here, and then group 2, so 65, 72, you can get it a bit closer than I can. So they're the levels in here, which is just really 1, 2, 3, 5, and 8, the Fibonacci numbers, but group 2 gets a little bit more complicated there, but I won't go right into all of that. But breaking it down into this matrix here gives you a plan to work with. So we know that if we get support on top of number 3 here, the 30, then it will push up to number 5. So getting support here and having a classic trading levels pattern, this pattern here, on top of that number 3 here, on top of here, is, you know, that gives you another trade to the upside here. But here I can see that we've got 1 and 2 in here. So we still need to make another high here before we have that ABC pattern coming back again. But using the pattern and the levels together strengthens your Elliott wave count. And then you can also bring the volume in too if you're if you're looking at the cash market or the futures market. This is a CFD product here by IG Markets on a pro real-time platform. So it will be a mixture of the futures and the cash there, and fair value and so on, also tucked into that. But reading the volume is really important, and you can get an idea of that on our website, just to make it I make it really quite simple to read. Otherwise, you can study Richard Wyckoff, who was the person that understood the relationship between price and volume, and then everybody's added it from that point of view. So the FTSE, let's see where the FTSE is. So the FTSE too, I have to change the structure here a little bit, because we've got this move up through here as being corrective, and also in line with the S&P and so on. It's lagging somewhat here. Also in here, it still could fail from here. This is also group 2 in here as well. So we can look at here at 10, 20, and 30. When a market comes down, it always bounces off 30. So the number 3 is, every single number has a personality and a character, and it's really good to slowly get to understand them. So anyway, group 1, the midpoint, and group 2 here. The group 2 here, this will be roughly that's about 60-40. So I'll just double check that. So that 72 will be 61.8%, so close enough. And that's where the resistance is going to be here. So getting support on top of a classic trading levels pattern sitting on 72, or 80 will be the trigger to go long to the upside, but don't overdo it because you've got to get through 72 over here as well, and that will play out at that point. But the market finding support on 72 here will make this bullish. But if it's going to fail, this is where it's going to fail from here. It's going to try and get support up here and fail and move down from that point. But looking at the other markets, they appear that they need to move higher. So it's likely that we're going to get support on this level here. So we can expect higher ground to come into this market, and the resistance further up here is the 61.8%, so roughly up around the 72, 70, 80 area up here as well for that. But build the trade in on the 72 and the 80, and then just chill out and wait for the 72 to become the support with the classic trading levels pattern on that, and then move back in. And you can also move in through group 1 here as well. So yeah, just building in on 72, then 10, then 20, and then once 30 becomes a support, you build in on that, take part profit at 50 or not, or all of it, and then move back in on top of 50 there as well. Alrighty, cheers.